Good afternoon, everyone. Thanks so much for joining another webinar hosted by Dvara Solutions. Today we have two distinguished guests amongst us. We have Joby from Dvara KGFS and Gaurav from Karza. We will be talking about digital KYC for financial institutions today. Before we actually jump into the topic, I'll spend some time introducing both Gaurav and Joby and their respective organizations so that we get familiar with them. So Gaurav is the co-founder and chief business officer of Karza Technologies. Karza is a banking and business intelligence service provider. They create products to help lending institutions to take informed and intelligent business decisions. Since their start in 2015, Karza provide a bunch of integrations with a number of KYC providers in the country. And they also provide insightful data analytics for decisioning using various data sources such as GST, PAN, Voters ID, and so on. So Gaurav co-founded Karza with his fellow colleagues in 2015. Before that, Gaurav had worked with companies such as Foxymoron, where he was their CFO, and a company called Shabang, where he was a co-founder again. Both these are into digital media. By qualification, Gaurav has a chartered accountant degree. He also has a CFA and an FRM with a lot of experience in building and scaling businesses, as you would have already seen from this intro. And he is also someone who's very dynamic and very adept at taking business decisions. So Gaurav, thanks so much for joining the session. Welcome and appreciate it.
Thank you, Aaron, for the introduction. Thank you.
Thanks, Gaurav. Our next guest is Joby. Joby is the CEO of Dvara KGFS. Dvara KGFS, as you all know, works with a mission to maximize the financial well-being of every individual and every enterprise by providing complete access to financial services in remote rural India. So far, Dvara KGFS has touched about 1 million low-income customers in remote rural areas. These are tier 6 locations through their unique wealth management-based financial product solutions. They have a credit portfolio of about 800 crores spreading across 300 branches in 6 different states. So they are probably one of the very few companies who offer a bouquet of financial solutions ranging from credits, savings in partnership with banks, insurance, and payments as well. Joby has more than 2 decades of experience before Dvara KGFS in the microfinance market and the banking sector. Before joining Dvara, he was the CEO of Varam Capital, a microfinance-based fintech company that got merged with Dvara KGFS in 2019. Before that, Joby has also worked as CFO at ESAF Microfinance and ESAF Small Finance Bank. Before that, he also had stints with Northern Arc Capital and ICICI Bank, where he was the head of Global Microfinance Principal Investment and Trading Group. Joby is a chartered accountant by qualification. So Joby, thanks so much for joining. Appreciate it.
My pleasure, Arun. Thank you.
Yeah. All right. So before we move on to hear from Joby and Gaurav on their thoughts, let me just introduce why we wanted to talk about digital KYC. I'll just share my screen. So what is the need for digital KYC, right? So as per RBI's definition of digital KYC, it's a pretty narrow definition wherein they focus on how can financial institutions through their representatives or agents have a video conversation with the customer and collect the following things like photographs, collect documents, KYC documents like Aadhaar or any other KYC document, and also collect geo coordinates so that the lending institution and also the regulator knows that the conversation is taking place from within the country. So those are the 3 aspects of the video KYC, which RBI narrowly defines as digital KYC. In this conversation, we will spend a lot of time on this aspect. But in addition to that, we will also spend on other aspects of digital KYC itself with respect to e-documents, DigiLocker, DigiSign, how are those things are working and in place, aided by companies like Karza, Dvara, KGFS, and so on. So we will focus on that. But really, what is the need for digital KYC itself, right? We all know KYC is the first and one of the most crucial steps in the customer onboarding process as far as financial institutions are concerned, and it's one of the critical process for lending institutions as such. So as far as the customer is concerned, gone are the days when he or she has to go to a place to take a photograph and go to another place to print his or her documents and then submit it in a bank branch. Now, literally in a matter of minutes, customer can submit their KYC documents, which the lending institution can then verify and validate before onboarding the customer. So faster service is a key for the customer here, how they can get a service really soon. And the next one is with respect to access, right? Today, customer prefers how can he or she get access to services much easier and faster. And finally, coming to convenience, like we discussed in the last session, customers need not go to bank branches or offices of lending institutions. Today, these services reach the customer's doorstep, and that is a matter of convenience for the customer. These three things happen predominantly because of technology and digital intervention, and that's why something like digital KYC plays a pivotal role for the customer. And for the financial institution, there is a big emphasis on how can they optimize their OPEX. Things like how can they save on their physical locations, how can they save on material like paper and so on. Those things are happening thanks to digitization, and today there are ways and means in which financial institutions reach out to customers without any branch whatsoever. There are a number of fintechs who operate purely on through their mobile and through their tech intervention. And as far as documentation is concerned, again, a lot of things are completely digitized, wherein financial institutions serve their customers completely digitally. So it's a win-win for both customers and financial institutions, and creates a sustainable environment for both these stakeholders. And it's a no-brainer actually why digital KYC should be the way forward, right? And as we all know, there are three important components to this digital KYC itself. First one is driven by the financial institutions who are exploring new and cost-efficient ways of collecting KYC from their customers, and also doing deduplication and validation with a bunch of integrations through external service providers. So financial institutions play a critical role. Then we have a lot of technology innovation happening through solutions providers, fintechs. There are hundreds of different fintechs, especially in the digital KYC segment, who are coming up, providing innovative solutions to address the challenges in the financial services segment. And finally, we have a lot of financial institutions who are coming up in addition to fintechs and tech firms, who are innovating in many different ways in serving their customers better. And one of the other key stakeholders in this whole digital KYC journey is the regulator itself, who, although many believe slightly slow, but they take their time to ensure that all the customer interests are protected before a regulation is brought in. So today we have digital KYC, clear-cut regulations from the regulator, and also at the same time enable financial institutions innovate on customer servicing. So these are the three proponents of the digital KYC journey itself, who play a critical role in ensuring that the customers served faster, better, but also in a secure environment. So it's actually a no-brainer that digital has to be a key, has to play a key role in enhancing customer service and lowering costs for financial institutions. And that's why we thought it would be a good idea to have a conversation around this topic. And no better people than Joby and Gaurav. Joby is actually at the inflection point of remote rural financial inclusion aided by technology. Dvara KGFS today uses a lot of technology interventions. And similarly, Gaurav, through his organization, is working with a number of financial institutions, helping them on the digital KYC journey. So, without further ado, let's hear from both of them and take this conversation forward. Just some housekeeping. So we will have this conversation with our guests for the next half an hour, and then we will open out for Q&A the last 15 minutes. In the meanwhile, if you have any questions, keep posting them and we will take it up during the Q&A. Right? So maybe Joby, I'll start with you. Given the kind of experience you have in the microfinance sector over the last 20 years, you would have seen the whole journey moving towards digital in the last few years. Can you talk about your experience overall and also with specifically to the digital journey at Dvara KGFS?
Yeah, so thank you, Arun, and happy to be there with you, Gaurav, and with the whole team. So KYC has been kind of always one area as a financial services company, but I would say kind of I started taking KYC very seriously when I was running Varam. And that was kind of a startup where we, kind of started microfinance operations, and we had a couple of frauds with customers, KYCs being, kind of used by others, duplicates being used with the knowledge of the customer. So while I was in microfinance for long, and I thought, kind of it's time to kind of really reimagine the way microfinance is done in 2013-14, and around the time was the whole Aadhaar UPI. I would say the whole NPCI, UIDI combo kind of really kicked in with a lot of this whole open API India stack framework. So I thought of looking at a paperless, cashless, and using a little bit of data science kind of a microfinance operation. So, and being small, I never had the courage to kind of do it in large organizations like ESAF and ICICI Bank. It was kind of, it had its own set processes to kind of go about it. So here I saw, like, apart from a couple of benefits that Arun explained, for me, the primary mover for going eKYC was to kind of remove the fraud in the whole customer onboarding exercise, and really go to the core of know your customer, right? I mean, it was kind of just another checkbox to be ticked in the normal operations, but we want to kind of really take that seriously, to kind of really want to know the customer well. And I can't think of anything better than eKYC as the simple mode of doing that, and the simplicity with which it came, and and it was really awesome. And we were one of the earlier one to kind of really go with Koshla Labs, and then connected with UIDI, and that was really good experience, right? I mean, you have an app that is integrated, and that when you put the biometric with the photograph and address coming on to your system, and it was very electric moments for even customers and for institutions as like, there is no other way that you can look at the face of the customer and look at the photo in the machine and see nothing more than that to kind of really convince. And sad that the whole Supreme Court, kind of issues came, and we are not no more able to use as kind of NBFCs, while banks and others can still use it. Every other solution to me is a workaround. I'm not kind of got not so comfortable. Gaurav might be an expert on that, but I would say whether it is on video, KYC, and there are so many, kind of you have to somehow do it. Therefore, there are many ways people are figuring it out. And yeah, now there are solutions around even voter ID and, kind of things like that. So, but I would say, kind of to me, one was risk. Secondly, also to kind of really see that cost of operations, because I saw microfinance as kind of running on largely three pillars. And to me, all those pillars are kind of huge cost, kind of pillars. Like one is it uses lots of paper, lots of hard cash, and then it needs a lot of frontline officers to do the business. That's how business was prior to 2013, 14, and kind of even prior to demon. So which all of this, the tendency that every year the cost goes up, right? I mean, your manpower cost goes up, your paper, the moment you touch the paper, to move it, to store it, to do anything with that, you need to kind of incur cost. And the hard cash, again, currencies to move it and do anything with that. So microfinance was largely running on this. So then we thought it makes sense to kind of reimagine a bit, kind of cashless, paperless. And then if you can use a little bit of data science, then, kind of the whole backend decisioning, if you can move into smart machines, and then you are more confident about reducing the frontline staff more for servicing, and then you can even use kind of agent networks, because customers want to do a transactions, and you can think about relationships very differently. So these were kind of our initial hypothesis to kind of really start Varam. And I would say kind of in a year or two, I mean, I was very fortunate to kind of get around my CTO, Satish. He was then building the, app for Big Basket team. And then he was excited about microfinance. And then he joined me to kind of really think about the whole digital interface. And pretty soon at that point in time, many banks were not open with API framework during those period. And I found RBL was the one which was kind of then very, kind of open about those ideas. And then we set up a app, and then was directly connected with the UIDI, then with the credit bureau, and with the bank. So then lots of stuff then got, kind of a 18-day TAT, you are kind of almost kind of brought it down to half an hour, right? I mean, if you want to kind of really do the loan in half an hour, you are good to go. But then there was worries about bankers to kind of say, how do you do about 3 days CGTs and GRTs and meetings and all that? If you don't do that, your lenders get really worried about it. But your mind, you have solved it, you have nailed it, and kind of whatever you want to know about the customer. And to me, it was a lot more stronger that kind of, because we were having then the latlogs of the customers. Without the help of the frontline staff, anybody can go and meet the customer. We are verifying the customer's mobile number using an OTP. So you have a OTP verified mobile number with a customer address being latlogged, and then bank account verified through an API banking, and KYC verified through eKYC. I can't think of a much better, a stronger environment to do microfinance. The prior world was all like you're betting on, right? I mean, it's a bubble, like, it can burst anytime. You see it in one branch, it's kind of going out, and then you are only praying that it doesn't happen any other place. So to me, this was a great experience. And once you get hold of the data, then your journey is different, right? I mean, then you are, you are excited about what you want to kind of, because there's lots of data coming to your systems, right? There are Google, I mean, this whole latlock data, your photos, because you have an app and you can click photographs of the meetings, and then, so, and there are, once you have that, there's lots of analytics you can do about that. So to me, your real knowledge of the customer comes not by seeing it, but if you can just connect all the data points about the customer, and can still, and can make out a profile of the customer. And to me, that was really great. And once you have lots of such data, then decision making is a lot more faster. You can track patterns of customers. We didn't intend to go a lot in that path, but it was kind of accidental. We came about building a fraud detection tool for microfinance customers, purely because we are seeing many patterns of the customers who are kind of defaulting. And then we went back and see that, okay, do they have any particular traits that we can think about, so that any new customer coming, we can test with whether they have any of these traits. So I would say the journey was really very exciting. And the beginning was the eKYC and the, the NPCI led whole innovations. So I'll stop there, and be happy to kind of take any specific questions. And, you'll also kind of, want to kind of hear the kind of the stuff that Gaurav has done, part of his, kind of innovations.
Fantastic, Joby. That's truly an exciting journey that you've been part of, and hopefully it's just the start again, right? Where so it's not necessarily a checkbox to be ticked, and it's actually a game changer in the whole scheme of things, where you said how you've reduced the whole turnaround time for the customer from 18 days to 30 minutes. That's phenomenal, right? So, and the second thing that you spoke about, which is again interesting, is how do you use a bunch of proxies like geo coordinates, bank account API, and mobile OTP. So, if you look at it, there are elements available which you look deeply. You'd be able to solve problems for the customers with that kind of infrastructure available. So thanks so much, Joby, for sharing your thoughts. It's really exciting. Moving on to Gaurav, thanks for patiently waiting. Appreciate it. Uh, Gaurav, so in your experience, right? So you've worked with a bunch of organizations, right, from 2015. So how do you see this whole digitization journey evolving in the last 5 years or so, generally, and more specifically with respect to digital KYC as well?
Firstly, thanks for having me, guys. Thanks, Joby, for the introduction and where you all have brought the Dvara organization today. Specifically to answer the question around, I would say, digital KYC. So there is a brief history to it, right? In 2015, there was no Aadhaar. The only format of KYC that was regulatorily being acceptable was an original seen and verified. Traditionally, organizations or lenders would take a 15 or a 10% random sample. They would then go physically verify these samples vis-a-vis the government departments to understand that, yeah, are there any kind of fraudulent applications permeating into their systems, and try to plug in those leakages. Comes along Aadhaar, which changed the way that people were looking at digital or any KYC document as such. As Jovi rightly mentioned, that hey, you are getting the photograph of the person, the name, address, and you are done, right? That okay. So that give a taste of what digital KYC can be for the entire ecosystem. Given the rightful issues around the privacy concerns that were raised at that time, obviously that took a step back. But having said that, what definitely lingered on is the aspect of that, yeah, KYC can be digitally verified, can be digitally retrieved. Similarly, government under the Digital India Initiative also launched DG Locker, which by its own self gives the control of their documents to the customers themselves. So today, where if you have to see the transition from 2015, which is a pre-Aadhaar era, to today, where you're looking at, so the buzzword today is all about STP, right? Straight to processing. And one critical element of that obviously becomes KYC. Today, while Aadhaar, whether it be eKYC for banks or offline XML-based KYC, something that Karza also has like 3 different modules for, is one of the key asks before starting any kind of a customer journey. It has to be coupled with multiple things. So when you talk about digital KYC, it is also it combines 4 or 5 different modules. It combines a liveness check that, yeah, whether the salesperson that is in front of the customer or the customer's DIY app, that, yeah, the Aadhaar data that was being entered and the OTP that came into the customer was being entered by the customer themselves. So which is where there is a liveness SDK today, or a liveness check that is also being quite popularly done, wherein it detects the photograph of the person, whether there is a face. It checks whether this photograph that is being taken is of a live customer and not a photo of a photo or photo within a video. In that same format, you have face match services. One other area of fallout that I used to understand, which happens at the operations level, is that ultimately you've also collected a PAN card as a part of the KYC, right? And of course, that is digitally verified using NSDL. But more than often, the name on the PAN card and name on the Aadhaar would have been different. And which is where then you need certain other scoring APIs, which is where we spent almost 2 years in building our name match, address match, and face match APIs, very specific to the Indian ecosystem, where we could understand that, okay, a person's name can be Alok Kumar Yadav and Alok Yadav, or say MD Zafar Iqbal vis-a-vis a Mohammad Zafar Iqbal. In Gujarat, it would be Akash Bhai Nirmala Ben Bhutani vis-a-vis Akash N Bhutani. So, which is where we actually tweaked our algorithms. We won the Amazon AI Award in December 2019 specifically for our address matching algorithm as well, wherein we understood that there is no singular way in which a person writes the address, right? Worli Naka is Acharya Katre Chowk, but the thing is, it's still the same address. So what has genuinely been, I would say, a stellar moment for the Indian BFSI fraternity is the way the organizations adopted Aadhaar and built an ecosystem around it with these matching algorithms, with the liveness check, building a flexible and a very dynamic workflow in their applications, whether it be sales, whether it be partner driven, whether it be feet on street driven, whether it be a customer DIY app journey as well. So yeah, to answer your question, I would say the digital journey transformed. Obviously, one of the key pedestals there was Aadhaar, and it is just going forward, right? Wherein we receive almost on a daily basis. KYC is obviously one of the key starting points, but the key question that is asked is also what else can you make digital for me? Whether it be employment verification, whether it be face matching, and so on and so forth. So yeah, I would say definitely, and because of COVID now, since we are living in this particular time, right, and it doesn't seem to go anywhere. Life is moving on, which is something which we have now seen even in terms of our traction. Since the lockdown has opened up, the traction has improved by almost 70% to the lockdown times. So you can actually see that yeah, people are now interested in de-risking from themselves from the physical processes, where say there were 1,000-member ops team who were either physically moving around or physically viewing documents that, okay, this is the name as per PAN, this is the name as per Aadhaar, to committing to OCR technologies that can efficiently read these data points, match them, give a singular score, and then move on. So I would say, yeah, to answer your question, it's obviously the need of the hour. Apart from that, of course, one very critical piece that Joby also mentioned is fraud detection, right? One starking revelation that came to us at Karza was that during the time, especially in April, the second week of April, we saw the number of fake documents that were being submitted to our part lenders rose from an average of 6%. Obviously, it varies depending upon the loan category, from 6% to 17%. That's a stark jump of 11% in the number of documents that Karza was receiving, and wherever we had to give an output back saying no record found, this document does not exist, this person does not exist, this employer does not exist, and so on and so forth. So yes, we are seeing a shift now because of fraud, because of the need of going digital, in the way digital KYC is perceived and the ecosystem around digital KYC is being perceived.
Thanks, Gaurav. That is pretty comprehensive, the way in which you describe the whole process. And especially, I'm sort of very interested to know a little bit more about the liveness check and the address match that you provide. That's pretty interesting. Moving on, Gaurav, so one bit I wanted to understand from you is on the video KYC aspect itself. Since its launch earlier this year, do you see any traction, and what are the kind of opportunities and challenges you see there? And if you can share a few examples also, that'll help.
So video KYC came around sometime, I think on 9th of January this year, where RBI laid down norms in terms of how a physical OSV or a physical due diligence of the customer can be waived off. The timing by RBI could not have been more perfect, given the fact that COVID was almost around the corner. And obviously organizations need to now look at being able to de-risk themselves from the physical touch points that today exist. In terms of video KYC, the journey is fairly simple. The ways into which organizations are today adopting it depends upon the kind of model that you're running. So for example, primarily if I have to break it down into banks, NBFCs, it depends upon which tier you are talking to, right? Whether it's a tier 1 city or a tier 4 city. What kind of target audience do you have? Do you have the creme de la creme of salaried personal loans, or are you giving out payday loans to, say, auto rickshaw drivers or a lift man, and so on and so forth? Obviously, there is a requirement for taking the process completely digital, and video KYC, like I said, is one of the additional areas that now compliance is also allowing you to be able to automate. From the perspective of our lending partners, as well as I would say on the liability side of the bank as well, when you talk about current account and saving account onboarding, the initial traction that we are seeing is anywhere approximately 10% of the loan accounts, where wherever possible, obviously because this is a new thing and it's a brand new adoption, we are seeing a rate, an average adoption rate of roughly 10% for the clients that we have already live with. What estimated numbers we have is that approximately by 2022, 2023, 40 to 50% of your banking as well as lending operations will be facilitated with video, right? Wherein the adoption will be more towards SDKs and apps over and above a simple web-based journey or an SMS-based journey. Which is where we focused in the initial days itself on an SDK piece, simply because it allows for, number one, a clear, and I would say a smoother video experience. Second, it gives me the precise lat long of the customer, which is technically not possible when you're looking at an IP-based address lookup, right? Looking at a reverse engineering. So with one of the banks, the problem statement was that even with the lat long, when you're looking at Google's APIs or India Map My India APIs, you get the nearest address. You don't get the complete address or the exact address of the customer. So which is where now what we did is, so because we spent a lot of time in developing the address API, we could actually alienate the city, locality, street, and the complex within the address retrieved to give a certain percentile score that, okay, this person's address, which is coming via the video KYC vis-a-vis what has been purported as his current address, are 80% similar. So thereby giving the ability for the agent who is, or the underwriter or even the RM, to take an instant call, which then gets recorded, logged, as well as audited based on the concurrent auditor norms also laid down by the RBI. But yeah, I would say the amount of interest that we are seeing towards video KYC has definitely peaked. The first runners for this is obviously someone like a Kotak, an IDFC, and so on and so forth for the liability side. We are now seeing the same amount of action on the asset side of the balance sheet for a bank. Yeah, I think this piece is definitely here to stay. One of the few things that I would say any banker or any lender needs to watch out for is having the understanding of their target audience and then choosing the right solution, because it's never one size fits all, right? You need to choose a partner that's very agile. I'm seeing a very large influx of players in the video KYC space comparatively to any other field that I've come across personally. That's also owing to the fact that we are sitting in COVID. It's not too hard to create a video server, but it's definitely hard to understand the ideal agent journey, to be able to control the timeline of the call, to be able to resume a call when it breaks down, given the Indian ecosystem that we're dealing with. So yeah, I would say video KYC is definitely here to stay, and it is definitely going to boost the entire drive for digital India and digital KYC coherently.
Yeah. So although there is a surge in all these video KYC providers, right? But what is crucial is how well you understand the customer and how better you know them over a period of time, right? I think that is the critical ingredient. And another key thing in your thought that you shared was the percentage match, right? So it's not always a binary thing when you take decisions on people and their real lives. There is always an element of know-how which comes from how well you know that customer, and that is always the local knowledge that you can use. And that's an interesting feature that you've built, where you see the percentage match and then you let the front end staff to take the decision on whether to proceed or not. So that's an interesting thing, because technology itself can only reach that much unless you enable it with softer knowledge about the customer. So that's a good thing to know, Gaurav. Joby, so one of the things I wanted to take it up with you, given your work across the years and with Varam and then with Dvara, is that, and you also touched upon this in your introduction, which is how do you make some of these processes, including KYC, as not only the checkbox to be ticked, but something which really gives life to the overall organization, right? So in that sense, how do you think the mindset of people has changed, starting from financial institution to regulators to your own employees, and finally, very importantly, customers? What has been their response to something like a digital intervention in your overall process?
Yeah, so I would say, kind of the earlier barriers to kind of really cross is that your own organization culture and kind of customers kind of awareness about kind of all of these tools. So kind of but our experience was kind of very positive. Like when we took these services to kind of, for those times it was kind of more of an eKYC, and kind of customers welcomed it because they knew that there has been lots of kind of fraudulent cases, because without their knowledge somebody has taken loans in their names, and there was lots of awareness about the way the Aadhaar was working. So for them to kind of put their biometric and then do all that seemingly kind of give confidence to them that you are working with a responsible organization, and they verify your identity and address. I would say customers kind of took it very positively. And for our own kind of staff also, it reduced a lot of their work. So initially the difficulty was to kind of learn, because there is a little bit of this whole handheld devices they have to manage, and then often in the initial days you have to be little prepared with failures, right? I mean, you don't expect that all 100% will go live. Kind of this has certain failures. So I would say some of the lessons learned is that you should always have a deviation thought through, that kind of if customer doesn't go through in this channel, how do you kind of still kind of don't upset the customer, can have still a better journey for the customer. So don't see that because the customer did not succeed on the eKYC, customer is a fraudulent customer. No, it's just that technology has its own difficulties, it has lots of interface issues, it could be connectivity. So we don't kind of attribute that a failure is not really very bad, though it is inconvenience. So you say you come up with another process. What you want to really know is that the customer exists, customer is a genuine customer, and the address is something which you can. So that's where I said, kind of beyond the legality of the KYCs, today it's possible to kind of, just the way that Gaurav said, it's possible to kind of make out from the place where you have taken the live photographs, and kind of the address that you've already given, and and the whole lat log, all that will kind of create a near confidence level even before you kind of see whether the effort has kind of really succeeded or not. So, and I would say that is one major, and now there are lots of roundabouts. Even if you can't do, like I'm not using eKYC now because we are not permitted to kind of really use. But we were one of the largest, kind of user of the AEPS through RBL. So there are roundabouts that you can do. I mean, you doing even the ₹1 transfer, or doing a kind of a balance inquiry. All of that kind of really do kind of in the back end, it actually does the, the Aadhaar authentication. While the front end transaction would be kind of giving you a bank account balance, or a kind of a ₹1 transfer, or whatever it is. So I would say that kind of there was great acceptance, and customers really viewed this as kind of a step in the right direction. It saved time for them, it saved papers for them, because I remember in the early days and all, one of the pain point for customers to kind of really arrange a passport size photograph to kind of really go for the application, and they have to go to a photo studio, and if they don't have, they will bring some photograph they've taken during their school days or something. And with that, you can't really look at the customer and say it's the same customer. So I would say that, the whole technology has really helped the onboarding experience, and the customers really liked it, and it saved time for them. It saved cost. It looked more responsible, and kind of mitigates a lot of known risk where the misuse by, because there's lots of kind of microfinance, as there are lots of leaders, and kind of there is intermediation is still very very prevalent, and technology helps that whole disintermediation quite well. And customers, when they get comfortable about this technology, is not very intimidating. That's where how you build the front end is very critical. Kind of very often, if the front end experience, if it's not nice and if it's not very smooth, even if it's a great technology, it may not be adopted well by your own front line and as well as the customer. So I would say a lot of design thinking and a lot of user experience, everything is very critical in designing. And more importantly, to kind of say that there is a roadmap for every customer, to kind of, for a genuine customer, you don't reject, and you have to kind of see that kind of there are ways to kind of really do that.
And what are the kind of challenges you see or you face when you do that in your service areas? Because you predominantly work in tier 6, to a certain extent in tier 5, also tier 5, tier 6 locations. Gaurav, when he was talking, he mentioned that financial institutions do a segmentation, identify different tiers in terms of location, and also identify target segments, and try and go to one tier first and then one segment first. Uh, do you do something like that, or what are the kind of challenges you face in your service areas going digital?
Yeah, so we are kind of currently we are completely in rural areas. So there isn't further scope for kind of segment customers by geography, because we are kind of, this was a choice made by the company. And challenges are in kind of, there are places where we don't have sort of good connectivity, kind of, which can be one issue that we kind of face in kind of really, kind of, if the solution is kind of connectivity heavy, and kind of it needs to kind of do live checking and all of that, that's where you may kind of really go. But there are workarounds are to kind of really say that such customers, it could be maybe 2 or 3% maximum, you can kind of ask them to kind of come to the branch and do that. May not be the best experience, but you can still have the comforts of doing the KYC. But there are places we still see the lat logs are difficult, because of kind of, they are really very interior.
Sure. And Gaurav, one of the things that I wanted to maybe you wanted you to elaborate on is on so given the kind of challenges you mentioned and Joby spoke about, what and the fact that you work with a number of financial institutions, different types of institutions, right? What do you what would be your feedback to them on this digital KYC journey itself? What are the things they should keep in mind? What are the things they should follow? And are there things that you would want them to do?
Sure. So I would say, okay, so there are two kinds of institutions, right? One is that growth stage and mature stage. Obviously, for both of these, one thing is common is that there is both governance and then compliance. While digital KYC does solve for governance, there is a trade-off when it comes to compliance as well. For example, is Aadhaar XML legal or not? Is it tenable? How am I supposed to use it? How am I supposed to store it? So luckily with the new video KYC regulations, obviously there was a recognition to the Aadhaar XML quite explicitly so. One personal feedback I would say, whenever we have seen, so because the thing is, whenever we as API middleware providers go to lenders or go to any kind of financial institution, one common piece is that, hey, you know what, I'm really unhappy with my loss provider. Can you recommend some? Basically this XYZ has this level of issue. So one common theme though is the I would say lack of agility. It's the lack of flexibility. Regulations change, right? Like for example, video KYC. Before that, there was something else. Before that, there was something else. Aadhaar itself was like a roller coaster ride, right? So the point is that you need to choose a partner that is also very flexible, is also as equally dynamic as the regulatory environment in which you are operating in. So I would say, yes, definitely having a partner which is very agile is one of the most critical requirements. The second piece, of course, is I would say internally as an organization, the philosophy has to be adoption of change. One of the few problems that I used to face way back in 2015, right, when we launched the first few KYC verification services. This is before Aadhaar, right, when you talk about driver's license, voter ID, electricity bill verifications, which were unthought of and unseen that time. The resistance that we used to get was, "Mera kaam chal raha hai," right? That I am doing OSV today, it's working for me, I'm happy with the level of an NPA or any kind of an issue that I have. The thing is, obviously, each organization and each economy goes through a systematic crisis whenever, say, something like COVID happens. I personally know quite a few startups that are like on the verge of a shutdown right now. So whenever you're choosing a partner, as well as when you're adopting a particular process, you need to emphasize on that, yeah, why change is needed. Inculcate a sense of culture that also is responsive to change, is proactively looking out for innovative solutions across the spectrum, and then work alongside them to be able to solve for real problems that you as an organization are facing. So yeah, I would say agility as well as internally to adopt a culture of innovation. These are the two primary areas that I would say are required to be able to adopt any kind of a digital solution, including digital KYC.
Yeah, so the organization being ready for change is something that is coming out loud and clear from both Joby and you, and I can see how it's helping financial institutions, right? So I think it's a very insightful discussion that we had till now. This topic is quite diverse. We can go on for hours, but there is a there is a time we have. So we have about 12 minutes. We have some questions that have come in. We will take them. I would request the participants to key in their questions as well. So let me take the first question now. This comes from Mahesh Balan. What is the current regulations governing Aadhaar authentication? Are NBFCs allowed to use it? How are some fintechs using it nowadays? I think it's just pretty straightforward, where the regulator has given a very clear direction in terms, and the Supreme Court also has given very clear directions in terms of who can use Aadhaar and what facility of Aadhaar they can use. But maybe I'll request Gaurav to take that question. Given you work with multiple financial institutions, do you have any specific suggestions for Mahesh?
Yeah, absolutely. Great question, Mahesh. The first piece is obviously never store any Aadhaar number, right? And if you're storing it, it has to be in an Aadhaar vault. There are two guidelines that primarily govern using Aadhaar authentication. The first one is a simple physical base that, okay, when you go to the UIDA website and you're verifying it, right? But the problem is you can't really confirm the name of the person there, which means that you have to go via the offline XML route. Luckily, offline Aadhaar XML is considered as a valid KYC compliance. This is, of course, whatever I have learned through my interaction with multiple players in the market. I would always recommend looking at an independent counsel for Aadhaar. Having said that, yeah, offline Aadhaar XML coupled with selfie along with a timestamp and a lat long stamp. This format as a combination is considered as a valid KYC. The best part is that the Aadhaar XML does not contain the complete Aadhaar number. So automatically your one key problem of masking Aadhaar is resolved then and there. The second is wherever there is no mobile linkage, which means you're collecting an offline Aadhaar copy, we recommend two things, right? Number one is collect one alternate KYC. So something in tandem with the rural players that I have seen personally for one of the largest MFIs that we work with, they do Aadhaar, they even collect, legitimate Aadhaar OTP based KYC, but they still collect voter ID. And even wherever there is no OTP available, then they will collect an electricity bill as well. This is just to ensure that ultimately you have safeguarded your organization's interest in case of any kind of an Aadhaar pertaining fraud. The second piece is obviously the entire selfie piece, so that you can automate the face match function here in order to be able to confirm that, yeah, the identity of the person whose Aadhaar has been given versus whose photograph you have on hand is the same. You can use something like a driver's license, where we do retrieve the photograph from the source after due consent. So that can be used as a second or third measure to be able to curb your risk also. Yeah, I hope I've answered the question.
Yeah, it's such a shame that at financial infrastructure level, we have everything there with respect to Aadhaar, India Stack, and so on. But there are some limitations. I'm sure it's a matter of time before it's open to all kinds of financial institutions. As they say, no one can stop an idea whose time has come. I'm sure Aadhaar and India Stack in its entirety will be available for all kinds of financial institutions, right? Uh, Joby, so just a bit on that question itself. I know you built a lot of your financial technology backbone around Aadhaar itself, right? So how do you see this evolution, and what are the things you've done to navigate this regulation?
Yeah, so kind of whatever Gaurav explained is the way forward that we also see. It's kind of not legal now to collect and store the Aadhaar number. So I think you should have a vault, and you should be able to kind of mask the, kind of, these are simple technologies which you can do, and then with that it can still, with the data, it can still be kind of considered as kind of KYC, kind of legal KYC, because I will still consider that as one, the primary KYC, because the ease with which that you can then link with many other financial institutions, right? I mean, whether if you have an insurance, it's hard for insurance companies of any other this thing, then the whole process to kind of comply with that, kind of KYC is very hard. So the across the interoperability, and even for institutions to kind of really use that whole framework, I will still consider with the whole vaulting and masking and all to kind of treat Aadhaar as the first choice. And while you can't do an eKYC, use something like, kind of either any UPI ID based kind of an authentication, because in the back end, as I said, and or use digi signs or digi stamping, all of this is kind of, the backend is same. So I mean, even there are this whole error codes which tells you, like, if it's 404, it tells that bank account is wrong, but your Aadhaar is verified. So I'm just saying, kind of, once you are, I mean, I'm sure kind of Gaurav must be kind of a master on all of those things. We are kind of on the front end using, but as you use it for a long time, you figure out how to kind of really use it in a legal way. But the way forward is to kind of really see that kind of, there are workarounds now with the Aadhaar and still meet your satisfaction. What you want to kind of really know that the customer is a genuine customer, and the identity is verified, and that's possible to kind of do with that, legally doing all this vaulting and masking and things like that and all. And for all practical purpose, have one another KYC in case, because this is a bit of a gray area, you are able to kind of get legal opinion around this. But it's kind of still treated to be kind of, everybody wanted to kind of take a safety measure, saying collect also voter ID and one another, kind of voter ID, I mean, KYC.
Great. So we have another 5 minutes. Let's see if we can take a couple of final questions. So there are a bunch of questions, Gaurav, around the video KYC itself. So one question is on what is the duration of the whole onboarding process using video KYC. The second one, which is also related to it, is how can one control the quality of webcams or cameras that are getting used for video KYC itself. So if you can take it up, Gaurav.
Fair. Okay. Just as how in the start I had mentioned that depending upon the target audience, right? We have seen traditionally two kinds of time slots being opted. One is a 3-minute time slot for more of an urban crowd, to even an 8-minute time slot for a rural crowd. This is like basis my experience with two very distinct clients. One in the urban salaried loan space and the other in a complete rural microfinance space. However, one thing that I'm seeing as a dynamic shift now in the video KYC journey is that more and more of my clients have started asking for a personal discussions tab, which means that, okay, hey, you know what, like any which ways I have been asking my customer for, I have to ask them since how long are you living at a certain place? Is this your own house? Aapke ghar mein kitne log rehte hain? And so on and so forth. So basically, they want to also embed these questions as a part of the video KYC journey. That, hey, while I'm doing a KYC, I'm anyways touching base with the customer. Let me also finish in my personal discussions and plug it in. So in those kind of scenarios, we have a couple of clients who asked us for 20-minute, 30-minute, and indefinite time slots as well. Still turns out to be cheaper than a physical visit. Yeah.
In a sense, like what Joby said, it is not seen in letter, but in spirit. How do you actually see it as know your customer, right? To underwrite them better. Yeah.
Yeah, absolutely right. The second question that you asked me, sorry, what was that again?
The second question is around the quality of cameras that are getting used.
So I would say there are two approaches here. One is that while you can't use, so the RBI regulation very clearly says that you have to be as an agent, the employee of the lender, the employee of the bank. However, one model that I saw one particular institution opt is that they are using business correspondence to go with the tablet for the data collection, lat long coordination, everything to the borrower's house. They use their tablet to trigger the video KYC in order to make someone sitting back home in the lender's office talk, finish that compliance check mark. You have a physical confirmation as well, which is something that the policy and the risk team would have. And you control the quality of the video because it's a tablet that the person is using. From a kbps speed, something that we personally recommend is at least having a 256 kbps line. Anything below that obviously reduces the quality of the face match of the OCR that you need to do when the customer is mandatory, has to show the PAN card in the video and so on and so forth. So 256 is a basic ask. Anything above that is obviously very, very good. But yeah, so the quality can be governed if you're opting for a BC come agent model. And if it is a DIY kind of a journey, then of course, having the ability of moving front to back camera as well can govern managing cheaper phones which have VGA or a low megapixel camera as a selfie side vis-a-vis the other side. So Karza in its video KYC journey has enabled the agent to have the call to take or prompt the customer. Customer says allow, they move the camera, and then the customer simply has to switch his phone on the other side with the high quality resolution. And internet speed, as we all know, is something that is obviously not in our hands, right? But we do prompt the agent whenever the internet speed is low that, okay, you are going to face an issue during this discussion. So yeah, that is something of a safeguard we've accounted for.
Super, that is very helpful, Gaurav. We are coming very close to 5. I want to stretch this discussion, but I'm sure both of you are pretty busy and you have other things to look at. So thanks so much to both Joby and Gaurav for joining this session and sharing your insights. And I'm sure as we go along, we'll try to follow you on social media and through your organizations and see how we can leverage on that. So I want to end this session with two takeaways really beyond all technology, digital intervention, everything. I think two things. One from Gaurav, who said, if the organization is ready for change and if you prepare the organization to be in such a way that they're ready to get into any kind of evolving environment, then they should be able to adopt various technologies as well. And the second thing which Joby touched upon, which is probably the highlight of the session, which is you have to design technology interventions in such a way that it is seamless for the customer. Make sure your customer journey is smooth, and build your design thinking accordingly. So those are the two things I think. If you have a change ready organization, and if you are putting your customer front and center in all your thinking, you would be able to embrace upon all the change and the technologies that are coming your way. So with that, I want to thank all the participants who have participated in this session, and also once again, Joby and Gaurav, for your insights. Thanks so much, and look forward to the next session. Yeah, thanks so much.
Thank you, Arun.
Everyone. Thanks, Joby. Thank you.
Gaurav. Yeah.